This week on Capital Ideas, we go to meet an early stage fund. It's backed by heavyweights such as Google and Motorola, and despite what you think, it doesn't just focus on internet and mobile startups. Prashant Rajkhowa drove a very convenient 10 minutes away from our office to meet Seedfund.
There are few in the Indian startup community who don't know this man. Entrepreneur, business plan competition judge and the man behind the investment fund, Passion Fund. At least, he was till 2005.
So what was left around 2005-2006 was a complete vacuum of people in the early stage funding business. So Pravin and I got together and shot the breeze and said, we really need something that works out here. So we said, finally the thing said, why don't we start something?
And that was when Mahesh got together with Bharati Jacob and Pravin Gandhi of Infinity Venture Fund to form Seedfund, an early stage fund with a simple mantra. A 60 crore fund and you're not likely to need more than 4 to start a company. That means we can invest in starting 15 of you up.
For me and Mahesh perhaps also is that we have been angel investors. So it was kind of the next logical step is that instead of doing it yourself, get some institutional money and institutionalize the process of growing the company. So there is a huge gap in the market and this is something we enjoy doing. So it was a natural fit.
You can understand their pain, you can understand their difficulties at times when they're genuine difficulties. I think that's really a very important aspect of what we are. Second is the fact that we have all worked for many years, the grey hairs that all of us have, I think adds to just far broader perspective.
Seedfund opened their investing account with carwale.com, and what began as a site that offers great deals on used cars with just 500 listings is now the leading site for great deals on any sort of car and served more than 10 million customers in the last year alone. And if you thought the cliched dream come true story couldn't be real,
let me compare my process with the Seedfund with one other VC which I approached. What we did is, the first VC when I was talking to, they call them early stage VCs, but every time you go to them, they say DNA of your company not yet ready because you're not making revenues enough, etc. Wherein when we go to Seedfund, they looked at more in terms of what the team is, they look at the fundamentals, what this business potentially could be, and Seedfund partners invested their personal money into the company because Seedfund was not formed. It was at the stage of getting formed, etc. May June 2006 they started giving us the money, and formally they got set up only in October 2006. So what I liked about them is that they were committed.
It was very obviously a space in which there was a huge physical gap. That is, that there was no ability for anybody to buy a used car. So that gap, could be very well fulfilled by Carwale, and they understood what they were doing. Clearly, I think we just loved the entrepreneurs.
And the love for entrepreneurs continued with healthisn.com, a diet and health management company started in 2007 that was funded by Seedfund after 11 months of bootstrapping. A company that's still on the road to break even, it's Seedfund's role of mentor that ends up being as valuable as their role as investor.
The first thing that an entrepreneur would typically look at is the kind of capital amount, which is of course very, very important. But besides that, typically for first time entrepreneurs, what is more important is also to look at certain other aspects. One, definitely the chemistry between the investor and the investee company, right? Because going ahead, it's pretty much like marriage, right? So going ahead, it's important that both of you gel together, both of you have the same vision of the company going forward, and it makes the expectations are similar on either ends, and it makes life so much more easier, right? That's one thing that entrepreneurs definitely have to look at going ahead.
Till date, Seedfund has invested in more than 10 companies and are very clear in what they look for in a potential investee company. 1, you need to have the potential to be a big consumer brand. 2, you need to be able to break even with a 4 to 6 crore investment and hand over a 30% share. And 3, you need to be exitable in 5 years. Oh, and a word of advice, leave those spreadsheets at home.
Some people come to me and show me a 3-year or a 5-year projection. I'd say that's nonsense, that's bollocks, right? I run a business, I find it damn hard to predict revenues 1 year out, right? Don't come to me with 3-year projections. I see people doing 10-year projections. That's an exercise in Excel. You just put the bottom right hand corner of Excel and draw it out, and Excel fills in the numbers. and it's crap. You know, astrology is better than that. I can read the tarot better than that. I think come with maybe a 1 year idea of numbers and tell me that you can break even on and you can start earning money within the money that I give you with some cushion.
So if you think your startup's a perfect fit, all you have to do is send an email to info@seedfund.in or submit your business plan directly at www.seedfund.in.
Seedfund also pride themselves in their availability to the extent that they actually encourage entrepreneurs to come over, sit down, have a chat before they actually get into the nitty-gritties of business plans and term sheets.